All right. Hello. Good morning, good afternoon, good evening, wherever you are in the world. It is good to have you all with us. What a week it has been. I don't really need to tell you all um, the news of the week, although we're going to anyway. So there's really only one story this week. So why don't we start it off with Christian? You don't have to give us a full rundown of everything that happened this week, but why don't you just give us the highlight and we'll take it from there?
Yeah, sure. Thanks, Jacob. Well, yeah, I'll start off by saying, yeah, I hope no one lost too badly on the Terra ecosystem, whether that was Luna or UST, if they were holding any of those tokens or like other related assets. Um, but yeah, obviously a lot of people did get burnt, and it's been a pretty dramatic a week for that. I think we could safely say this is probably going to be one of the historic weeks that's remembered alongside the likes of Black Thursday during the COVID crash and the Mount Gox hack of 2014, although I wasn't around then. But I think similar scale, and yeah, we're not really sure to what extent this is going to have yet. What I would say is, yeah, we'll probably see increased sort of regulatory attention. We're already kind of seeing signs of that, and at the same time, hopefully more sort of awareness and kind of diligence and research when kind of investing in things like this that ultimately can be very risky. Stories of people getting burnt out and losing like $1 million or more, or like their life savings, however much that is in this thing. Really sad to read. So yeah, the aftermath to this is going to take a long time, but that's something we're kind of looking into, and that's what we'll unpack today as well. So yeah, I guess the starting point to this whole thing really was on Saturday when UST that experienced like a series of big sell-offs. So there was like one on Curve Finance, and also I think from what I understand on Binance as well. And that initially led to a DPEG event, but it was relatively minor. And after like deploying capital, as Do Kwon, Terraform Labs CEO put it, they were able to kind of like bring it back to life. But yeah, that was sort of short lived, and it didn't like fully return to $1, and we just saw the situation escalate and get worse and worse over the course of the week until we've got to where we are today, where Luna is essentially trading at zero. The market cap down from $30 billion a week ago to 6 million. So 99.99% value erased. And yeah, I think it's worth kind of just explaining for anyone who's not familiar with the way Terra works. Its main sort of product, you could say, is UST, which is a stablecoin. But it works differently to other stablecoins like USDC or USDT, in that it's balanced by Luna. And Luna is like the volatile token, and that's the one that kind of people speculated on, and it really rallied up in price last year. And essentially works through like arbitrage, right? So when this is how it's meant to work anyway. When UST falls below peg, it can be burnt to get $1 worth of Luna, and that essentially like reduces the price and in theory like brings it back to peg. And then the vice versa, the same when when it trades like above $1. So yeah, it's like this relationship guy I spoke to today who lost a lot of money on it described it as like a seesaw, which is one way of putting it. And the idea is that the seesaw is sort of flat all the time. But what happens is if it sort of kind of falls significantly below peg, which it has done in the past before this as well, it creates like a race to the bottom scenario, or like however you want to call it, a death spiral, a bank run, where everyone is rushing to get out at the same time, because the value of their dollars is less, and as a result, this is why the supply of Luna tokens has gone from like 300 million to well, like six trillion, I think it is today. And so yeah, Luna, it's just so like diluted that it's worth nothing, right? So this is why we have these people that have lost everything. So yeah, I think that kind of covers. That's kind of a high level overview of what's happened.
Thanks, Christian. Yeah, that kind of is where it all started, right? Saturday night. Some of you may recall I wrote the newsletter on this on Terra's weekend on Monday, and it was very odd timing to write that letter because what I basically waxed upon was the idea that for Terra's mechanism to work, it depends on a market wanting either one or both tokens. And what happens, and what happens if suddenly Luna becomes, just a toxic asset on the market? Nobody will care. And then that night, I ended by saying, we're going to see if this sort of let the market sort of this deployment of capital that Luna Foundation Guard tried to save the peg with, to see if it would work. And by around 6 or 7 o'clock that night, it was pretty, maybe even earlier that day, it was clear that it wasn't going to work. I'd like to open it up because I'm sure this is a historic event. I'm sure everybody has thoughts and feelings on. I'm sure everybody took a slight burn at at some level. So I'd just like to open up to the group before we move in any particular direction. What are your general reflections on this week? Did anybody see it coming? Was anybody shocked by how dramatic it was? Does anybody know anybody? This could go all kinds of directions. Let's start with. I'm going to be mean and pick on Tim because I always pick on Tim first. Sorry, Tim.
No problem.
What was your reaction to this? Like, were you just glued to? Because I think you were off on Monday. Is that right?
Yeah. I wasn't writing on Monday, so first time I really got to grips with it was sort of when I logged on in the evening just to check what everyone had been doing. It's been very hard to digest, really. Like, you see it happening in front of you and you're sort of thinking, well, nothing like this has ever happened before. Surely something will happen. And I think perhaps that might have something to do with why it has caught so many people off guard. Like Christian mentioned, it's not the first time we've seen UST wander from its peg. In May, literally almost exactly a year ago, I think it was May 26th, was when we had like the big market crash after the Coinbase IPO. So that was in 2021. Yeah, and it was down to about 96 cents at that point. Not looking good, but it recovered. And so I think that from seeing that, a lot of people were like, well, it's not out of the question that it could depeg, but it seems reasonable to expect that it would go back to peg, as that's what most stable coins do. Obviously, this wasn't the case. And like we said, there's a lot of reasons why, but I mean, I didn't see it coming. And I've just finished writing up a piece today on all the venture capital firms, some of the smartest people in the space, people like Zusu, Kyle Davies, then you got Mike Novogratz of Galaxy Digital, all these people who heavily invested in Luna, the Terra ecosystem, seemed to be completely blindsided by this. It just didn't appreciate the risk that was there. So I think the whole space will be doing a lot of soul searching going forward to try and address why did people underappreciate the risk? What can we do going forward to prevent things like this from happening again, or prevent our, I guess, to stop ourselves from taking such risky bets. I mean, I think you can say it's collectively as a space when you had, like I mentioned, so many of these VCs and really smart people who were throwing millions into Terra with the belief that this was sustainable. This had some risk, but it wouldn't. I don't think they're appreciating the risk that go into a death spiral. I mean, sure, it could depeg short term, but I don't think many people really appreciated that. And then I guess as a final point, though, you've got to acknowledge the people who had been calling this for a while. There was a small group of determined people I saw on crypto Twitter, at least, who had consistently called out their skepticism on Terra and the sort of relationship between Luna and UST, calling it a Ponzi scheme or whatever. And yeah, it seems that they were proven right. And yeah, it was probably better for people to have put more stock in what they were saying, even if it didn't seem like they were right at the time. History makes fools of us all, I guess, at the end of the day.
Thanks, Tim. I think there's so much to unpack here. Hindsight is 2020, obviously, and it's easy for people to look back and say, obviously, there's a record of tweets of those folks who were claiming that Terra was a Ponzi scheme from the beginning, and I suppose the historical record that is Twitter will validate them in some way. I think it's fair to say, I mean, I'm a pretty skeptical guy about a lot of these projects. I think you guys know that about me. I wasn't shocked that this all fell apart. I was surprised at how dramatically it all fell apart and so quickly. I thought, we spoke about this in the writing room a few days ago. We thought it was, I think, the general consensus on Monday morning that it was going to go back to peg and everything was going to be fine. But, nevertheless, I guess my question I'd like to bring up now is, since hindsight is 2020 and we can see this more clearly, although we are still unpacking it, were there warning signs we should have noticed? Were there warning signs you guys did notice? And maybe, Anthony, I see you. You're already on this. What do you got for us?
Yeah, well, there were several people in the Discord, in the community, that over the maybe around about the last couple of months or so were having these discussions about, is it a Ponzi, and do I invest in this or don't I, or whatever. And so yeah, I think a few of us have been having conversations about the market cap of Luna compared to the market cap of Terra, and also UST, sorry, and I'd always been of the opinion that as long as the market cap of Luna was higher than Terra, things were fine. And for a long while, it was quite a lot higher, wasn't it? I mean, it was doing really, really successfully. So it was in a really good, secure situation, sort of technically, aside from the issues about the anchor yield and the 20% and the yield pool having to be topped up endlessly. But yeah, it was kind of looking really good. But then, as the market began to slide, the Luna market cap began to slide, and then, in the final days, it started to look a little bit like the Luna market cap was like the rate at which it was dropping relative to UST was possibly accelerating a little bit, almost as if people were just beginning to think, hang on a minute, once that market cap crosses, everybody's just going to dump it. So yeah, we kind of there were several of us in the community that were kind of looking at that and watching that and kind of speculating and theorizing on how that was going to play out. So yeah, it's very interesting to watch in a kind of morbidly fascinating way, and then watching the fallout on Twitter as well was it's kind of again equally morbidly fascinating.
Yeah, Twitter has been an interesting place over the last week. So an interesting point that was brought up this week. Obviously, we've a lot of eyes. Terra's founder, Do Kwon, has drawn a lot of eyeballs over the last week, and perhaps rightfully so. And then among what was brought to light was the fact that, or the alleged fact anyway, at least according to, I think it was CoinDesk who broke this story, that he had been involved in a previous project called Basis Cash. Some of you guys might remember it. It was another attempt at a stablecoin, very similar. It used a bonding mechanism of some kind. I didn't take the time to understand it in much detail, but it had a couple of anonymous founders who went by the pseudonyms Rick and Morty. And it turns out that, at least according to this reporting and according to the screen grabs that they claim to have access to and former colleagues, Rick turns out to have been Do Kwon. Surprise. How big a deal is this? Because it certainly felt like a big deal. I don't know if my gut was overreacting a little bit, but when you guys when this was brought to light to you, when you first saw this, what was your what did you think? Christian, I think you have some opinions on this if you're comfortable sharing.
Yeah, sure. I'll be careful with what I say because
I can move on to someone else if you want.
no, it's all good. Yeah, I mean, I guess there's there's definitely a question of ethics, right? And it's not just Do that we've seen this with, if this is true. There's stuff like 0x Sifu this year with Wonderland, and it turns out that guy's like a serial criminal. Or this week as well, the guy Zagabond, one of the founders of Azuki, like one of the top NFT projects, most sought after NFTs of the year. And it turns out that he's rugged, in inverted commas, 3 other NFT projects in the past. So we are seeing these repeated examples of how basically anonymous or pseudonymous founders, this space just allows them to kind of make a comeback, and after they sort of give something a try and it doesn't go well, or they steal some funds or whatever it is. And in this instance it was trying out an algorithmic stablecoin. I think if he's failed on one, he should maybe know, and he perhaps should have toned it down a bit on Twitter when he was being particularly vocal about this, and that once the Bitcoin Reserve Fund started. I mean, it makes me think, looking back on it now, it's he must have realised at some point, and this is what sort of people theorised to their credit a while ago as well, he must have realised at some point that it wasn't going to work, which is why they probably started buying all the Bitcoin through LFG. But as they bought more Bitcoin, he just got louder and louder, and it was you would just see Do Kwon on your feed every day, when it was a year ago, kind of no one knew who he was, and then he's on the cover of Bloomberg as labelled as the king of the lunatics. It just did become with these algorithmic stablecoins, it's quite reflexive, right? So when things are going good, it goes up a lot. Luna was going up a lot in price, even as the rest of the market was tanking. And that's kind of how it was in Q1. It was suddenly out of nowhere, it was exploding. and then it sort of fell just as dramatically in like a super short space of time. But yeah, should Doe have kind of been more open about his previous endeavors, if he had any, then I would say yeah, and I'm sure there are a lot of people that would agree with that as well. Yeah.
What struck me as kind of odd about this was just having, if it's true, that if he had been involved in such a failed project, that he would have such tremendous confidence in his successor project, that, or at least publicly, just seemed to have absolutely. And maybe that was the idea. The secret sauce was to just instill that kind of unfailing confidence. Navesh, I see you unmuted. What do you have to say, my friend?
Yeah, I wanted to say that, let's just assume that he would have said that he was a part of Basis Cash, and I don't think that would have made much of a difference, because until now we haven't seen any algorithmic coin succeed in this industry. Ample Fourth was, I think, getting close, but then it also failed. And I think a few weeks ago we were all happy by seeing the success of a fully decentralized stablecoin like UST. And the worst part that they were doing is they were giving yields out of thin air, and 20% yields on a stable coin in such a market where even 4-5% is a grace, was something they were funding from outside, and that's what started the flywheel and led their market cap to such highs. But they had a lot of time, I guess, to reduce those yields, and kind of they were trying that, but I'm sure that they would have feared that a bank run like this could happen, because that was the only part that was keeping the liquidity in the ecosystem. So I'm not sure that at $30 billion, everyone was looking at a bank run, or hoping that this was fall to such dimensions. Because the whole point of the algorithmic stablecoin was that if it is able to maintain that dynamic equilibrium, and arbitrators can come in and profit if the peg falls, and then if there is enough utility, then it'll keep going on. And I just think that if this was like a black swan event, at least to me, if this wouldn't have happened and Terra was going strong for another 6 months, I think we would have had a totally different situation, and it could have come back to peg. But yeah, as you said, that when the market cap of Luna dropped below the stable coin, people were spooked, and it was quite clear that it won't be able to cover. And I think there was $1 billion bailout rumors that were going around, and at that time the discrepancy between the market caps was around 10 billion. So yeah, it lost a lot of credibility very fast, and it's very unfortunate.
Yeah, there's a lot of ways to diagnose the problem, but it all seems to come back to that. It was a crisis of credibility that seemed to come on all at once. And it did not remain isolated. As you all know, excuse me, the broader markets were affected by this as well. Correlation is not necessarily causality, but you all saw the charts. Bitcoin dipped down to, I think, 26 something at its lowest. Didn't stay there long, but it touched it. And I think ETH, the lowest I saw it was about 1,800, but it could have gone lower. I'm not sure. So at this point, I'd like to turn to Nathan to talk a little bit about the sort of broader impacts on the markets, what sort of long-lasting or short-term implications you see as a result of this. Any thoughts on what we should be doing over the next few days, few weeks, months? What's on your mind?
Yeah, I guess I'll jump on the last question first, Jacob. I think probably a good idea would be to look at the 30,000 level, because that's an area that Bitcoin hasn't been able to close a daily candle under in around a year, even when we saw the flash crash last year. So I think we've had a few closes underneath there, and we've had a bit of a pushback today. But I guess you've got to try to watch the trading action around 30,000. If we start to lose it again, I think the obvious thing is to do is for the market to try and take another look at where the low was made. I think where is it on some platforms around 24.2. So maybe get as close to that as possible and test it. And I think, you know, if it can't break it over the next few weeks and we get closer to this grayscale ETF thing that's in the background, I think there could be like a potential rebound in the market. But I guess if you take the negative scenario and you look at things coming from Ukraine and you know, the Fed are probably going to have to look at a more aggressive rate hike and that. So the market, if it starts to, you know, really hold under 30,000, and then like, you know, it doesn't really look like there's a bid coming in, even though we saw big buying volumes come in on Thursday. If we don't start to see this market recover, I think for me the big risk would be 20,000. And I was a bit surprised when we crashed this week that we didn't go down and test that area. So I think obviously everybody's worried about the fact that you've got MicroStrategy down there who's going to get a margin call, and I don't know if the market's going to be kind enough to let them get away with it or not. I don't know, but I think overall my gut feeling is don't jump into anything too hasty, and just keep an eye on 30,000, because I still think, even though we've popped a bit today, I still think the market needs to next week at least confirm that Bitcoin it's made 6 consecutive negative weekly candles. It's going to at least have to come down a little bit to see if it's going to break that negative sequence. So those are all the things that I'm watching for, and I think in this market I'm not really getting married to either the bull or the bear side. I'm still you know, open-minded on all possibilities, given like we've got a grayscale and other factors coming into play, you know.
Makes sense. Excuse me again. Yeah, I hate to just say I agree or disagree, but well, in that case, I won't. I'll open it up to the room to agree or disagree instead. What are some other thoughts on the state of the market right now? I guess broadly speaking, Brooks, I know you're always thinking about market cycles, ups and downs. You had some experience trying to game things in your days as a day trader. How are you feeling this week, and what are your prospects going forward?
Thanks for bringing me in, Jacob. Yeah, well, I guess first off, just to address one specific thing that Nathan said about the MicroStrategy risk of being margin called, because you know it's probably a lot of people have heard this and are worried about it, and perhaps they should be. But we covered a story this week on it, and it looks like that one is going to be okay. I think Michael Saylor even came to the defense of his Bitcoin position this week and said that they have so that margin call, which apparently will come at 21,000. If Bitcoin is 21,000, is only on 19,000 of their Bitcoin, and they hold 129,000. So they have over 100,000 Bitcoin to put up to recollateralize or to increase the collateral on that loan. Apparently, you don't really need to worry too much unless Bitcoin gets below 4,000. So anyway, yeah. As far as my opinion on the markets, I think that the extreme volatility in crypto, both to the upside and the downside, is one reason that it's such a powerful way to make a lot of money. If you look at any crypto chart on anything that's ever performed well, probably unless it's super new, you're going to see 70 to 99% drops. That's the game. That's part of it, and that's why you can become a whale or at least build a huge position if you have the conviction to buy when prices are down. If nothing changes fundamentally in the project, it's simply a better investment when the price is down. One example I cited yesterday in one of our weekend review, or one of our just team calls was, and whatever you think about Cardano, the point stands. It got up to $1.40 in the last cycle, so maybe end of 2017, early 2018, It went to zero. Cardano went to zero. It went to 2 cents, actually a little less, and then it 180x'd in recently to $3.20. So that's the downside volatility is good. So yeah.
And Cardano's got a community, so whatever you think about it, there are people who believe in that. So it was likely. It was in I feel like, given that, it was probably in a better position to weather a serious downturn as opposed to a project that, doesn't have a history of anybody really caring about it. I'd like to turn now to excuse me. I'd like to turn now to Mitchell. Mitchell, you're always among the calmest people in the room whenever I'm in the room with you. And you are known for not even paying attention to these kinds of things. But surely this week you paid attention.
I feel like this is an exception. I mean, it was very interesting to see the equivalent of a crypto bank run in our time. It was basically a liquidity crisis, and we've seen this happen again and again in traditional finance with all sorts of unusual securities. And in this case, people would argue this is not a security when you're talking about UST.
Right. So do you think this was a unique event, like a true bank run, in the sense that we hadn't seen? I mean, I guess we haven't seen something like this before, have we?
I mean, I don't think we've seen it at this scale. We're talking about on an order of magnitude in billions. I mean, there's been several instances where smaller DeFi protocols have death spiraled themselves because of liquidity. And also, something similar can happen actually for crypto mining, where the hash rate will cause gridlock in a protocol, where if you bump up the difficulty so much suddenly and then you withdraw that mining, it makes it near impossible to mine the subsequent block, and a proof of work coin can die as a result of that. And I've seen that happen a few times as well. So I think the essence of what happened with UST is not unique, but the scale and the magnitude. This is I'm not sure if it's quite a Mt. Gox level event, but it feels like the Mt. Gox of our time, of 2022 at least.
I mean, the sheer fact that already, Mt. Gox is the event that everyone is comparing this to. Everyone is going back to that one. I think that already signals, gives us some sense of how this is going to be remembered. Interesting fact, you guys may have, this happened a couple of times this week, but Janet Yellen, Treasury Secretary, has made, this drew the attention of the Treasury, let's say. She commented on it, I think, twice this week. But interestingly enough, I understand in her testimony yesterday, she essentially commented that she did not feel that, as bad as this was, that this particular crisis, or the stablecoin market in particular, presented an overall risk to overall financial stability in the economy. She was careful to note that the space is growing and that may not always be the case, but it struck me as kind of surprising that she would downplay this to the extent that she did. I mean, or maybe not to the extent to downplay it at all. It seems like it feels to me that usually regulators, when something like this happens, they want to seize on it as a chance to present their cases, and that does not seem to be what happened. What are we to make of this? Like Yellen's, I think I'm going to turn back to Tim. Tim, was it you who wrote the piece on the Global Crypto Authority on the way in the next year or so?
I did, but I also wrote a piece on how Yellen first mentioned UST, which might be more relevant here.
Yeah. Well, I want to move from one to the other.
Right.
What do you what do you make of this? Like, is Yellen, because Yellen has kind of seemed to have softened a little bit in recent months. Do you think, or am I misreading that?
No, I completely agree. I've covered the last few things, the few speeches she's made or hearings she's spoken at regarding cryptocurrencies, specifically stablecoins. And yeah, I completely agree. I have a quite favorable opinion of her that I didn't get in the past, maybe because I hadn't been exposed to what she was saying enough. But yeah, I think she's taken a really reasonable approach to cryptocurrencies. She's very aware of how, I guess, there is a lot of fear surrounding crypto regulation and sort of stifling innovation. And so everything that she says, and whenever she makes an appearance and speaks, she's always very, what would be the word? She's always very like, oh, it's lost me. She always makes it clear that any regulation that it will be considered will take into account the fact that we need to make sure that innovation is not going to be stifled, basically. And yeah, her main point really at the moment is like she wants stablecoins to be regulated, specifically centralized ones, so that there is some kind of auditing system enshrined in law that means that if USDT, for example, depegs, an investor will be able to get their stablecoins out at a 1-to-1 ratio of the US dollar. And of course, Circle and Tether say to holders, yes, we will absolutely guarantee this, but there's no sort of like legal framework there, even if they just say that they will or guarantee it personally. So yeah, I don't really know what this whole UST situation will mean for regulation. I do think that it will mean something, like we've discussed before. If you're using the US dollar as a unit of account, you're going to get US authorities like looking into what you're doing. If it's not the US Treasury, it's going to be the SEC, or even if it's not even under their purview, I'm sure they'll try and get involved. If not, one of the other regulatory authorities in the US. So something's coming, but I think that it's prudent to observe it as a different issue than stablecoin regulation that's being considered at the moment for stuff like USDC and USDT, which is really where at least Janet Yellen seems to be focused on in the short term.
Right. That's an excellent point. USDC and USDT are nominally backed 1-to-1 by US dollars, but I haven't looked particularly into the Circle, but like in the case of Tether, like historically, we know that's not been true. They back it with commercial paper and other forms of debt. They do not keep 1-to-1 cash reserves on hand, and they've gotten in trouble for it in the past. You mentioned, Tim, this is a question that's I'm not an expert in this field, but I wonder if someone else has some insight into it. Maybe you mentioned this idea that that there needs to be some, or Yellen seems to be of the opinion that there needs to be a government guarantee of the redemption of the stablecoin for fiat currency. That's essentially, it sounds to me like FDIC insurance, or at least something very much like it, and that is not free. Someone's going to have to foot the bill for that kind of insurance. Someone's going to have to cover that cost. Where does money like that come from? And I don't necessarily want to limit this to a U.S. discussion. This is an international team, so feel free to bring international perspective to this. But what does that look like? Like, is that taxpayer money that goes to guarantee a stablecoin? And if you do something like that, how does that work? Does anybody have any thoughts on this? Or have I just brought up something that, Brooks, what do you think?
Yeah, I think. Well, it reminds me of something else something else interesting that happened in the hearing, because I don't remember which congressman it was, but someone started grilling her. There was actually a lot of combativeness towards her, but someone started grilling her, and basically trying to pin her. Oh, actually, it was one of my congresswomen. I think it was a Missouri gal. She started grilling Janet Yellen, just trying to get her to admit that part of the inflation problem was the government spending and the stimulus packages. And she was getting pretty frustrated that Secretary Yellen wouldn't actually admit or give a yes or no on whether or not President Biden's spending packages had at least contributed to the inflation. So that was kind of interesting. So yeah, I guess the reason I thought of that is because I guess they pay with taxes or stimulus. Kind of the few trillion they've done recently. Yeah. But it does seem like that's becoming less and less popular.
Yeah, well, I mean, I don't think anybody in this room is going to advocate for turning the money printer back on to cover the cost of insuring our stablecoin. At least I don't think so. Navesh, I saw you unmute first, so I want to hear what you have to say, and then we can go to Ant. If that works. Navesh?
All right, thanks. Yeah, so, sorry. I was just saying that from an international perspective, I think stablecoins have certain risks because I think as an Indian, I know that I'm not supposed to hold US dollars instead of the rupee, because if a lot of people start doing that, then it undermines the national currency. And there are a lot of other countries who practice that, this thing with their own currency and the capital controls. So I think before 1 or 2 years, it was just a medium to trade cryptocurrencies, and not a lot of people were holding it for as their reserves or as their safety deposits. So I think if this continues to grow, then this can be some sort of risk that will present itself and maybe restrict people like me in India to not have USDT in our wallet, or if we have it, we have to justify for how long have we had it and what are we using it for. Is it just for the sole purpose of trading cryptocurrencies, or are we spending it in our day-to-day lives? So I think that can be one point of risk.
Interesting. I had not considered that. But I guess that would be very valid. And you've been waiting to speak. What have you got for us, sir?
So I thought that the idea of having to give up some tax money was that the idea that we might pay a tax towards some sort of insurance fund?
Well, so the money, if we're gonna insure it, the money's got to come from somewhere, and if the government is paying for it, the first place you turn to is either tax dollars or the money printer. So it seems like tax is the first place you turn. So not necessarily, but probably.
I don't know. It's like sounds like a recipe for civil war, doesn't it? Like, could you imagine having to pay a tax to fund some degenerates' bad investment choices because they put their do you know what I mean? Like, not necessarily in this situation, but the thought that obviously there's crypto is obviously so obviously we're very pro crypto, aren't we, in our community? But I was reading an article today from The Guardian, which I kind of retweeted it because I was so furious with it. It was just basically fudding everything that had happened, the way that people just get endlessly scammed, and crypto is destroying the world through the environmental harm that it's doing. And we're still in such a such an early phase, aren't we? We're still very, very early, and there's still a lot of disagreement in society about and lack of understanding as well about the potential of crypto and why it could be a good thing. I think right now any suggestion of let's make people pay a tax to fund, and potentially I would pay a tax in my country to fund the problems of a person in another country. So that's kind of to insure somebody in another country. So that's a kind of really difficult thing. And then, as Nivesh was pointing out as well, there's different reasons why people hold the stablecoins and stuff like that. But I think maybe moving in the towards the future, like if we ever, I'm sort of like putting my utopian futurists head on now, but if we ever get to a state where we somehow move beyond nation states and we all exist in DAOs or something like that, and we have some sort of choice-based system where we choose to collectively work in these little economic groups together which exist beyond borders and things like that, then community funded insurance, that I could see that being a more possible kind of thing in that circumstance. But that's off in the future somewhere, isn't it? So.
Yeah. I like where your head is at. I want to clarify, like the idea that a tax would have insured something like Terra UST. No way you can get away with that. No, just my humble opinion, no way. Maybe something like a USDC that has the dollar for dollar backing. I could see a government stepping in and maybe trying to regulate that with an insurance policy. But like a totally decentralized thing, I don't think you could sell that at all. I think you're right.
It's too late. Too late now. I'm not voting for you. I don't care what you say now.
That's okay. I'm not running for anything. Brooks, you had something to say, sir.
Thank you. Yeah, I guess just a small point. If this were to, like, this would likely not be the headline part of the bill. I feel like if they were going to fund this insurance, it would be, compared to some of these budgets, compared to the budget and probably the bill that it would pass in, I feel like it would probably come as a small part of a larger plan, be it a stimulus package or a new set of taxes. And maybe it would be interesting to see. I'm sure that publications would find that and would harp on it. But yeah, I feel like also I just wonder if USDC and USDT or Circle and Tether, if they would want that, because these are I think a lot of institutional players. So I wonder where the lobbying money would be going, and if it would be going against it. And then lastly, I guess none of us maybe would vote in favor of more stimulus, but I just want to remind that in the U.S., I think that Joe Manchin, what was it, 1 or 2 trillion? How much was it that Joe Manchin basically blocked? However many months ago that was. Yeah. I heard an argument at the time that he might be looked back on as inflation got worse, and it has gotten worse since then, I think, or has been more in the headlines, that we would look back on Joe Manchin somewhat gratefully that he at least helped to block that potentially further inflationary package. And it's interesting to imagine how much worse of a situation we could be in if that did pass. I'm not sure. Yeah.
Tim.
Yeah, so I don't think that the US government has any intention of levying a tax to insure private stablecoins. I think it's early days, granted, but I think what Yellen is going for here is that there should be some kind of regulatory body set up that audits companies like Tether or Circle, and gives some kind of, what would you call it? Like assurance to the public that in the case of a bank run, these companies will be able to redeem your stablecoins one for one, right? So currently, all we have is Tether's word that there is enough commercial paper. All we have is Circle's word that you'll be able to redeem every single USDC one for one with $1. I think that what the government wants to do is, set up some kind of body that's going to audit these companies and say, yeah, this is, if push comes to shove, in a worst case scenario, your dollars are reasonably safe, and we can attest to that through our investigation. Something like that, I believe, is what they're going for.
I think you're likely right. I want to just put it out there. If anybody in the audience has any comments or questions they want to jump in here, just feel free to raise your hand, and we'll get you up here on the stage. In the meantime, Ant, yes, sir. What do you have?
Yeah, I was just thinking from what Tim said then. So I think, Tim, this is like we have, I'm sure you probably have the same thing in the States and everywhere actually for the banks, where they have to hold a certain amount of money in reserve, don't they? They can't just leverage out like absolutely every pound or dollar or whatever that's deposited into an account. They have to keep some back. And I think, wasn't that post 2008 financial crisis that the kind of requirements were ramped up? Yeah,
much more robust. Yes,
because I do think that's the big problem, and the fundamental, like, I think the stable coins themselves, like the algorithmic ones, are fundamentally good. Like the mechanisms are essentially good. It's the endless borrowing on top of borrowing on top of borrowing that kind of creates problems in the system. So I think some restrictions at that level would probably do a lot to curtail a lot of the problems that we've seen, especially like this week. If they weren't so worried about their 20% yield and keeping that going and so on, they might have LFG or Terra, whoever it is, might have acted more sensibly by now anyway, just to kind of to lower that yield down, and maybe this problem just wouldn't have happened anyway.
Maybe so.
Just real quick. So you brought up the 2008 crisis, and how then how things got more robust. Jacob, you mentioned, and I just wanted, it reminded me of something another thing that happened in the congressional hearing yesterday, because they were talking about the 2008 financial crisis, and that was kind of, so they were sort of framing the discussion with that in mind, because it was about financial risks, the hearing in general, and crypto got brought up, specifically stablecoins, or they were focused in on. But several of the Congress people and as well as Yellen, they talked about the 2008 financial crisis. So I think that they were comparing. It's almost like you're comparing a $2 trillion asset class. It's actually quite a bit less than that at this time, but compared to say 2008. But the fact that they were talking about it as an urgent need to regulate it, even though at $2 trillion, they're basically not worried, and they said as much. And then they were citing the meltdown that happened in the UST Terra ecosystem, just as evidence of what could come in the future. But the fact that they're calling it urgent, and the president's working group came out with urgent recommendations that that regulation is needed, specifically around stablecoins, it tells me that they think it's growing. I mean, is this a reach, or do they think the crypto market cap's going to 10 trillion? I don't know.
I don't know. It could be very bullish signs. And
sorry, I forgot to mute myself. I was listening to Brooks. It's a good point. It's a good point, isn't it? Though, like regulation, it's a good thing, right? I mean, I think when I first came into crypto just over a year ago now, it's kind of like everyone was like, "Ooh, regulation," and a former colleague of mine who was actually a investment banker at the time of the 2008 crisis and was in the city and all the rest of it, was given it the old little go to zero, it's backed by nothing, blah blah blah, regulators will come and then it'll all get ruined. But actually, it seems like regulation would be a very good thing, because it would legitimise the industry, build in some safety mechanisms, and it might mean that the gains are not so extreme, right? But it would legitimise the industry and pave the way for wider adoption, which presumably would be good for us all, whilst protecting us all.
yeah, I think that's increasingly the argument you hear, as it becomes apparent to all of us anyway, that regulation is coming. More, whatever form it takes, we don't know. How fast it comes, we don't know. But there will be more of it increasingly as we move into the future. And we've just, I think, kind of embraced that idea a little bit. Both the president's working group as well as Joe Biden's executive order on cryptocurrency generally, which was very, as you'll recall, very broad, was widely interpreted as giving a green light to the cryptocurrency industry in a lot of ways. it was not a restrictive order by any means. It was, cautious but permissive. We've got a few minutes left. I would like to turn it around just to bring a little bit of sunshine into the room. We all say, or at least we have all said in the past, that it's that we're in the space early. It's really all uphill from here. Nothing moves up in a straight line. So, before we retire for the weekend, what is there to be optimistic about? What do you guys look forward to? What's on the horizon that maybe give you some hope, or is it just a matter of buckling down, gritting your teeth, and getting through the dark times? Nivesh?
Yeah, I am very optimistic on chain because like Bitcoin's price just fell below the production cost, which is to say that miners are making less. So I think old miners are going to phase out slowly, and there's going to be a larger accumulation between new miners. So that will be good in the long run. And apart from that, there's something called realized price. I think some of you follow Twitter would have noticed popular like on-chain analysts talk about it. So it's like the amount of money that has actually been put in to the system. So it calculates the price and the on-chain price where some Bitcoin is brought and keeps on adding it. It's not the market price where it's trading at. So that's called the realized price. And Bitcoin just tagged the realized price this week. So like in the past few months, we have had other like long-term on-chain indicators like the stablecoin ratio and MVRV, which is the market cap to the market cap to realized price ratio, which have been screaming lows. So yeah, but that is not to say that it is not a good time to practice caution, because as Nathan said, 30,000 will be key, and then the broad macroeconomic situation is worse this week. So if that continues to fall, then Bitcoin is obviously at a risk. But optimistically, I think it's a perfect position to start doing like DCA investments and slowly like choose your altcoins based on your risk tolerance. And I think that it's a good time to be active into the market.
I agree. And
Yeah, I agree with Nivesh. I was also thinking as well that we've got the move from proof of work to proof of stake for Ethereum to look forward to.
That's right.
When that happens, I think it's going to be really, really big, because I think environment and energy is such a thing to bash crypto with, that once that is out the way for Ethereum, I really think Ethereum will become like a really big sort of cultural, I don't know, movement or icon or whatever. And I think we'll all be walking around in the streets with Ethereum T-shirts on and stuff like that. But that's going to be really, really good when it happens, because it will give it a big boost. And also, Nivesh and I have been looking at some of our reports that we produce, and we've been looking at the underlying technology in some of the kind of crypto things. And there's some really, really cool development coming down the line. So when we eventually get back out the other side of this market, whenever it actually takes a good clear direction back up, we could see kind of more usage than ever in blockchain, which would really, really drive prices, and the market in a year or two, whenever it sorts itself out, could kind of blow us out of the water of what we've seen so far. So there's definitely tons of stuff to be optimistic about.
Right. Christian, last thoughts?
Yeah, the Ethereum Foundation, just on the note of the merge, they confirmed June the 8th for the Ropsten testnet, which I believe is the final one before it ships, basically. So yeah, we can expect it this year, I think.
All right. You heard it here first. On that note, I guess we'll go ahead and wrap up. We're on the hour, so I want to say thank you, everybody, for choosing to spend an hour with us this Friday. It's been a delight, as always. Take care, everybody. Have a wonderful weekend, and we'll see you next week.